Welcome to FYI, the For-Your Innovation podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit arc-invest.com.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests, and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.
Well, this is nothing new for us at ARK and Bitcoin Park. We've had Rockstar Dev on here. We've had a number of other pseudonymous and anonymous folks join us. First and foremost, thank you. Welcome to the Bitcoin Brainstorm, along with my co-host, Yacine Almandra, Director of Digital Assets, and Kathy Wood, Founder and CEO and CIO at ARK Invest. I'm your host, Rod Rudy, co-founder of Bitcoin Park, a community-supported campus here in Nashville, Tennessee, focused on grassroots Bitcoin adoption and a home for Bitcoiners to work, learn, collaborate, and build. And I'm pretty sure everyone here has been to Bitcoin Park except Yacine and Kathy. So it's going to happen. And I have an idea around, and by the way, this is a quick tangent. Kathy, you embedded that idea around convergence and figuring out like an idea and a summit around convergence. I kind of want to do it in July during the Bitcoin conference week. So I'll share with Yacine.
Kathy's already slotted to speak at the Bitcoin conference. So we've we're making our way down to Nashville in July. We're excited about it.
There we go.
We're excited.
Well, we'll bring Elon to the park, and we're going to do something really fun. So now we're on episode number 8. And if this is your first time tuning in, here's our idea. Thanks again to the support from Kathy, Yacine, and the ARK team. We're taking our monthly Bitcoin topic-based approach at Bitcoin Park and applying it to this not so new anymore monthly podcast series we are calling Bitcoin Brainstorm. Each month we plan to bring a different topic and invite amazing people from a variety of areas within the Bitcoin community. Our aim is simple: drive conversation around Bitcoin. And after going deep into Bitcoin with the first 7 episodes, we are now here today to dive deep into energy and Bitcoin mining and answer the question that many of us are probably wondering: is Bitcoin going to save the planet? We'll leave it up for these guests to answer that question. So we have approximately 60 minutes and we'll be covering a lot as always. But let's first start with some intros. Trey Kelly, founder and CEO of GRIID.
Awesome. Yeah. Thank you, Rod, Yacine, Kathy. Appreciate you having me on. Trey Kelly, founder and CEO of GRIID. We're a vertically integrated mining company, started in 2018. First mined Bitcoin, started mining Bitcoin in 2019. 4 sites. We just went through a SPAC process and recently listed on the NASDAQ. And yeah, excited to be here. Thank you.
Thank you. And that's a perfect timing of an introduction. I didn't even prep you guys, and that was the perfect timing on that. Also, another publicly traded mining company, Benjamin Yi, Executive Chairman of GRIID Platforms.
Thank you. Thanks, Rod. Thanks for having me. GRIID's a vertically integrated Bitcoin miner, which is publicly traded on the NASDAQ exchange. And it's our vision to become a leading Bitcoin-driven infrastructure platform company. And you may not have seen or heard much of me, but I've been with GRIID now going to my 6th year and working closely in partnership with GRIID's CEO, Jason West. We architected a significant turnaround, reconstituting our board, implementing our strategy, making acquisitions, growing our management team, and raising capital to, put us where we are today. And thanks again for having me.
Absolutely, man. Who's the number 1 miner? You said 2. I'm curious, who's number 1?
Based on what metric?
Yeah, based on what metric, but in terms of market capitalization, that would be Marathon as of today.
Okay. Market capitalization. I'm learning something. Okay, cool. Thank you, Benjamin. And joining us, a proud owner of the Apollo 2 and customer, John Stefanopolous, founder and CEO of FutureBit.
Hi guys, thanks for having me. Excited to be here and talk about the future of Bitcoin mining. Started FutureBit back in 2015. Our mission is to decentralize the Bitcoin network and make Bitcoin mining as accessible to as many people as possible. So we build small desktop miners that fully integrate the whole Bitcoin ecosystem in a single, easy to use desktop device. And we just launched our Apollo 2, which is our continuation of that mission, and we're excited for the future.
Great to have you, John. Thanks again for joining us. Steve Barbour, founder and CEO of Upstream Data and new data of number 2.
Yeah, I just had a second child, Evelyn, born happy and healthy on January 8th. But yeah, I'm the president and CEO of Upstream Data. Our focus really is to build, I see Bitcoin mining as a tool, simply put, and we try to integrate tools to solve energy problems. So of course, we're well known in the off-grid oil and gas industry. We build sort of small scale modular integrated generator and Bitcoin mines to attack the vent and flare problem. So it's a solution to conserve methane, and we're very successful in that. Our product fit meets that application quite well because venting of methane is very abundant at small scale. So we focus on these small scale modular products. And then, you've seen from me in the past, like we built other tools, if you will, like home mining tools, small scale commercial mining tools, like black boxes to meet a niche need for small scale mining and dealing with that in an easy sort of plug and play way.
And you've been doing this, from 2017 or 2018 when we met?
Yeah, January 1st, 2017. I was scheming before that, planning the business, but that's when we launched.
That's awesome, Steve. Welcome. And then Luke Dashjr. I don't even know where to begin with you, Luke. So I'm just going to pass it over to you just to provide your background on everything you've been doing in Bitcoin and what you're currently up to.
Sure. I've been Bitcoin core developer since 2011. End of last year, I started, originally I started the mining pool under the name Eligius in 2011 as well, but last year I relaunched it as Ocean. And the goal of the project is to decentralize mining on the mining pool side. Right now, all the blocks on the Bitcoin network are created by essentially two mining pools, Foundry and Antpool. So our goal is to not just be a third contender. We want to actually move the block creation to the individual miners and bring that up to hopefully several thousand different block creators.
Very cool. Ambitious and rock and roll, man. So Yassine, and where should we even begin? I'm just curious maybe to ask you your perspective on Bitcoin mining with this group of people.
Yeah, I'm very excited about this conversation, partially because as investors in Bitcoin, a lot of people like to focus on price, and those people who are so wedded to price often are highly skeptical of Bitcoin mining. And there's this weird paradox where the more obsessed you are with price action, the less you kind of understand Bitcoin. And so I think that there is a really interesting opportunity now that it appears like, with the launch of an ETF, a lot of momentum around Bitcoin price, to really go back to what makes Bitcoin so unique and what makes Bitcoin mining so essential. We've, for the last 5 years, have tried to do our part in educating people on the essence of Bitcoin mining, the importance of proof of work, some of the common misconceptions around energy consumption. And I think that there's no better group to level set on why mining and the evolution of mining more interestingly as well, where it's gone from a hobbyist activity to a multi-billion-dollar industry all in a decade. And I think that's not a coincidence. That's not just Bitcoin price. That is the free market working as designed, and guys like you understanding just how essential of an activity this is. Of course, off the backs of increased regulatory scrutiny on Bitcoin mining specifically, and some of the pushback that the Biden administration has had on Bitcoin mining just in the last few months. So lots of kind of spaghetti at the wall here, but really the core of what I want this conversation to be around is why Bitcoin mining, and where are we now, and the evolution. So maybe starting with that, why is Bitcoin mining so important?
John, I'm going to tee this up to you since you got into this first, and I know you got a passion for this.
Yeah, so it's a very complex question, but at the basis of it, why Bitcoin mining is because that's the mechanism that allows Bitcoin to remain censorship resistant at the base layer. So the miners are the ones actually taking the transactions in and creating a block and sending it out to the network. And without the miners, that wouldn't be the case. So the big thing of what I'm working on and what is important with our work is to make sure that remains the case in the future. Obviously, there's a lot of Bitcoin being done by corporations and big miners that, a lot of you are doing great work around that, but there needs to be a balance to that. So we need to have enough blocks created by free individuals to make sure that there's never any censorship resistance on the base layer of Bitcoin. And that can only happen really by blocks being created by free individuals. And that's kind of our core thesis of FutureBit, and what we're building is to allow people at the individual level to be able to create blocks. And, our devices are obviously very low power and small hash rate. But what we're trying to do is multiply that by millions. Obviously, one individual won't move the needle. But if we have millions of people participating at the base layer creating blocks, then there's going to be free blocks being created every day. And that will help the Bitcoin network.
And so can I just ask a question, John? How many individuals are involved right now? I forget who mentioned there are two major entities right now, including Ant. How many individuals are, I'd like to know, just kind of get a sense of proportion. Clearly the two are what you're trying to pull share from. And, how many individuals would you need to do that, given the way you're set up?
There's two answers to this. One is at the pool level. So a lot of Bitcoin mining is pooled, whether it be the big corporations. They also contribute hash rate to the big pools. So they're the ones actually creating the blocks. And in terms of the pool level, that's very centralized right now. There's literally about 5 major pools contributing over 75% of blocks. And that's kind of what Luke is trying to combat at the pool level. So that we should have hundreds of pools to make sure that the Bitcoin network is decentralized, not 4 or 5. And then on the individual level, there's almost no blocks being created by individuals. There are probably a few small solo mines that are mining by themselves, but this is a very, very, it's like 2% of the network. So my hope and goal for the future is we have a balance of, let's say, 50-50, where half of the network is being done by big centralized mines, and then the other half is being done on a decentralized individual level.
Just to clarify that question, John, on FutureBit, how does it work mechanically? Is it that you're aggregating individual hash power and redirecting that to a mining pool? Or are you providing that hardware? I think to Kathy's point, it would be how many individuals, let's say, are using the desktop miner that you guys are offering at FutureBit?
Right now, we're nearly at 100,000, and we hope to get to millions.
Is the number going up rapidly, John, now, especially as the price has reignited the interest, or has it been steadily growing, steady as she goes?
Yeah, it's been steady growth for us because a lot of people that are interested in our products actually, they don't care about the fundamental fiat version of Bitcoin mining. They don't care about the profitability. They care about defending the network. So most of our customers are actually Bitcoiners that have bought Bitcoin off Coinbase. They've delved more deeply into it, and they're like, okay, I should be participating at the base layer. So those people discover us that lens. And they're more interested of making sure that they're participating and defending and the network in this manner.
So pretty sophisticated then, if they're asking that kind of question. Yes.
To add to your points, like I think the numbers of users are going up exponentially for Bitcoin mining, but the problem remains, as Luke alluded to, that there's still a centralization in the service layer, like the pool layer, and other aspects like exchanges and on ramps. So it's sort of it's a balance between exponential growth in users, but also concentration of authority, if you will.
And I think it's like the push and the pull of those two things, right? Like switching costs on pools is very, very low, right? Within seconds, you can update the config to point to a different pool. So the switching cost is low. It helps hold these pools accountable. Certainly more pools, viable pools, is better for everyone. But as you look at decentralization of mining, these folks have to, point their 10T machine at a pool. Otherwise, they're looking for kind of the golden ticket and may never get Bitcoin. This ensures, that they're getting paid daily on the hash contributed to the network. And I think, why mining is important is why Bitcoin's important, right? Like it's one of those few things that seems to work better in practice than in theory. And it's because it does what it says it's going to do, right? And we ensure that as miners. The trust aspect of Bitcoin, 21 million Bitcoin, blocks every 10 minutes on average, halvings, all of these things are, miners, nodes, and code are kind of the three legs of the stool that support Bitcoin that the usage sits on top of. So I think it's just important that we understand kind of why mining is important is it aligns interests, right? You look at the greed angle. It's in your best interest to look at the blocks and honor the network as it is. You look at the incentives, and it incentivizes folks that are mining to help ensure that Bitcoin does what it says it's going to do, which is simple but true, and one of the reasons that we see Bitcoin doing what we all kind of knew it would do here. So I just wanted to add that comment.
Well, to a large extent, rules like the 21 million limit and not being able to steal Bitcoins is enforced by nodes more than it is by miners. But
yeah, maybe for the audience and for you, Kathy, as well, kind of laying out part of that, the evolution of the mining industry, where like, why do we even have mining pools to begin with, right? And I think that kind of they were introduced in late 2010, really in response to the increased proof of work difficulty that effectively inhibited individual miners from consistently mining blocks. So, in the early days, you draw CPU to mine a Bitcoin. That was a hobbyist activity. Now you have large scale data centers. So a traditional CPU, would take centuries to mine a block. And that's where, mining pools, literally pooling resources and sharing processing power in mining pools, allowed for some of the smaller scale operations to survive on more predictable and timely payouts. That is kind of the essence of mining pools. Trey and Steve and Luke, and I want to get to you, Luke, have raised is that now you have, call it 4 or 5 major mining pools that are pooling resources, but they're also creating the blocks. The construction of the block is to the discretion of the mining pool. And so there is now a concerted effort to, if you're not going to at least distribute mining pools, to at the very least distribute block template creation. So like things like Stratum and now Ocean. So maybe, Luke, if you want to talk about, why this is so essential, where in many ways you do need mining pools if you want that individual miner to have that predictable payout, but you're still, balancing the line between censorship resistance and allowing the individual miner to mine Bitcoin. So Luke, if you want to set up what Ocean is doing to tackle that, I think that'd be helpful context.
Right. People talk about censorship resistance, and it's something that we do not have today with only 2 to maybe 5 mining pools, although it's really Antpool bought out a lot of the smaller mining pools and basically runs them as well now. To get the censorship resistance, we need it to the point where if miners, in this case, if pools A and B don't mine your transaction, it'll still get mined by one of the other thousands of miners that are actually making blocks. So that's our goal, is to have it so that not just pools are making blocks, but the individual miners, and That way, if one miner doesn't like your transaction for whatever reason, someone else will pick it up.
As I've watched industries over the years, once the consolidation move starts, it's hard to stop it, right? And so is this a movement that you think more and more people, because of their concern about the security of the network and censorship resistance, that you're galvanizing a movement? Is this like, okay, that nature would take us to more and more concentration over time, which tends to happen in most industries. But we have to stop this. So it's a movement within the industry. It is a mining movement, a minor movement, or it's a major minor movement.
I mean, we're talking about different levels here. I mean, there's the pool level, there's the hash rate, there's the growth in hash rate, and I'm not well versed enough at the pool level to be able to speak to it as articulately as maybe Luke or others can. But certainly from a hash rate perspective, I can tell you that it's very hard to continuously grow your hash rate, at a certain percentage every single year. It's very, very difficult. And I think what's so interesting about Bitcoin and Bitcoin mining is that, it's designed to basically incentivize even small operators to go where that stranded energy is, where that cheapest form of energy is, right? And it's just a system of incentives that just continuously reward that over and over and over again. And I can tell you right now that it's way harder to find a 100 megawatt site or a 1 gigawatt site than it is to find a 1 or 2 megawatt opportunity. Way, way harder, right? And so I think that there's going to be a lot of room for smaller operators to find their opportunity, to become successful. And then one day they're going to be big enough where, maybe 1 megawatt doesn't move the needle so much anymore. But it's going to continue and over again because, the system incentivizes that behavior over and over again.
The home miners aren't even competing at the same level. When you're doing it at home, you may have a way to merge mine Bitcoin with your heat if you need heat for the winter. And so you got that power bill regardless of whether you're mining or just running a space heater. So you might as well mine. And at that point, it's basically free energy for mining.
That's right. Imagine a world where you have all of that space for the smaller operator then.
Right, and even if they're running at a loss, often kind of the home miners, they are either kind of curious and tinkering, or they're living in on the Bitcoin standard themselves, and with a low time preference, they're not concerned about the dollarized, cost of power relative to the space heater and the Bitcoin rewards.
They might be if they're losing a lot of money, right? They might just say, let's turn on the power.
Correct.
Yeah, and that's what we're seeing with our customers, and that's kind of why we chose the power level of our devices. So if someone runs, let's say, a Bitmain S19 at home, it's going to cost them $500 a month to run, and they'll quickly shut it off next month after they get that power bill. What we've seen with our devices is no one shuts them off because it costs a latte a month to run. So no one's going to power it down because it's an extra $5 a month on the power bill. And to go off Kathy's questions about, is this a revolution? That's exactly how I kind of describe the whole mining scene. I kind of equate it to the early compute days when computers were all IBM mainframes back in the 1970s. And then the PC revolution started in the 1980s. We're kind of seeing what I call the personal miner revolution start up right now. And we're kind of at the forefront of that. And we're seeing a lot of new startups popping up that are tackling these heat mitigation solutions at home. And we're seeing a renaissance of that in the market. And it's going to be incredible to watch, us grow and other home mining solutions grow that will allow everyday people, even some that don't even know it, because there's going to be products, let's say like a water heater being introduced in their homes that's actually mining Bitcoin while they're heating the water. So there's cool stuff happening in the space, and we're excited for the future of it.
Can I jump in and just say Bitcoin miners are literally the craziest people in the industry? Why? You could literally sit at home and just click the buy button and buy spot Bitcoin. But you, including myself, because I'm mine Bitcoin, believe that with all of these crazy variables, put John to the side right now with the home miner, that we believe that we can mine Bitcoin at a better price than just going and acquiring it at spot Bitcoin ETF. Or excuse me, not spot Bitcoin ETF, but a spot Bitcoin price. That's just pretty remarkable to me. And you guys doing it, Ben and Trey, on an on-grid infrastructure level at really massive scale. And then Steve on the off-grid side, that's another thing for Yassine and Kathy, like this on-grid versus off-grid world, and seeing the innovation happening in the off-grid side. We touched on waste heat. We touched on all these. I'm actually curious to Steve and others, like, so what are some of these innovations that people don't even think about? We just talked about, Luke just mentioned, heating your home. That's like 1A of like the first step. I could see a home being completely, all the appliances that are wasted, like my dryer, my washer, my dishwasher, all having a little BitAx or some Bitcoin mining infused inside of each of those.
I was going to add that just for some perspective, like most of our customers in the oil and gas industry do not care at all about Bitcoin. They see our product just as a tool to get by a problem they're having, which is usually, they have an oil well that's rate limited. They can't produce the well as, at the volume they'd like because they have regulatory pressure on their gas egress situation, whether it's like venting or flaring. So, which to me is a huge positive. Like, people are interested in the Bitcoin tech and don't really understand it. And what I find is, for most of our customers that are direct oil and gas operators, a lot of the people in the company, like the engineers, the operators themselves, the pumpers, they're interested in Bitcoin, but when it trickles up the chain to management, they're not. So we have to get creative with them on a solution that they can work with us on, like whether it's like a sort of like a power purchase style agreement where they don't touch the Bitcoin and it remains on our balance sheet, but they buy like the equipment. Or, of course, the most popular one is like a gas takeaway agreement where, a company like mine would finance all the equipment and just sort of have a joint venture with the oil company. But either way, the net benefit for them is in some manner potentially revenue, but it's also massive emissions reduction as it relates to methane venting and flaring. But as for like, the pace of technology improvement in the space is unbelievable if you're paying attention to how it's been developing, not just from like the stuff John works on, but even on the industrial scale, like the quality of the tech, like the air-cooled miners, the water-cooled stuff coming out. I mean, to give you an idea of how we use the tech with oil companies, a newer product that we've been developing is like a 480 volt system that they're actually renting it from us, not for Bitcoin mining. They're renting it from us to power their oil and gas facilities, just like a normal generator rental, like run of the mill. It's been happening for 50 plus years or well beyond that. But we have integrated Bitcoin mines into it so that normally when you rent a piece of equipment, like, you don't get all the power out of it because you don't always need it. So we then buy all the excess off them. They don't need to touch the Bitcoin mine. It's all automated. So, that's an example of what we do in terms of improving the tech. And there's like a million examples, like from the people in this room and the industry abroad. But what's happening in the pace of innovation in Bitcoin is astounding. And the fact of the matter is, like, probably, you sort of led the discussion with, some regulatory concerns and what we normally see from the public. You see in the news, people concerned about energy consumption. The fact is that I would say the vast majority of Bitcoin mining energy consumption is not additive to the global energy demand. It's sort of adjacent, because basically 99% to all of our customers are not incrementing the energy demand. They're just displacing what was wasted in a vent or flare or something with a Bitcoin mining load. And you sort of see the same with Riot here, for example. They're building these massive mines, but they're not really impacting in any negative way the local grid, because they're curtailing it as required when the when the market needs them to, based on pricing and other contractual obligations. So,
Steve, I think you bring up a great point. Like, your customers don't care about Bitcoin, right? Like, it's so important, right? We talk about, our key power relationships and power partners. One in TVA, where you have metered power. We don't go in and talk to them about Bitcoin. We go in and talk to them about their concern around managing all these peaks and valleys of the demand curve. And we come in and we say we are a constant buyer of power. We have machines that buy that power for $1 per megawatt hour, whether it's middle of the day or midnight. We value that power and can tell you point in time exactly what these machines will generate in revenue dollar per megawatt hour. It's a second buyer of energy that prices power completely independent of the grid, can be shut off immediately. And what that is to them is found money, because those are otherwise lost revenues. And again, this supports their incentives that everybody has to kind of, by 2040 to be 100% carbon free. That takes capital, right? How do you do that? By squeezing more revenues and more dollars out of existing capacity that you have to upgrade your infrastructure. With Eagle Creek, for example, we have a site behind the meter in upstate New York at a 40 megawatt hydro dam. This was they were selling merchant into the market, and the dam runs fine, has a high capacity factor, but the wholesale market was they weren't fetching good rates. So we were able to come in and say, hey, we're going to build a 13 megawatt mine right next to the dam. And when the wholesale market's paying more, sell it to them. When the Bitcoin mining operation's paying more, sell it to us. And we think about kind of protecting the downside. We were able to do kind of a JV there where we were able to get, penny 1 cent per kilowatt hour power, but we share in the upside with them. For us, it's all about protecting the downside. And I think that is like the, pound the table as a miner kind of moment, which is, this is a hook into a much broader ecosystem. Like, what we're building is not just, and looking at as an addressable market, is not just of the remaining Bitcoin, how many can we mine, right? Like, this is a hook into fundamental disruption of the way, we're sitting at the intersection of energy and money, right? You talk about kind of size of total addressable market, it's massive. And what this allows us to do is bring a novel concept to an age-old industry of power generation and say, hey, we are a purchaser of power 24/7, 365. We can tell you how much we'll pay for that power. That dam in upstate New York would love to send their power into Manhattan. It's just not how it works. You lose it on the line, right? And so this ability, you've seen it in other industries. You saw it with Alcoa, but they couldn't shut off if they lost a pot line while aluminum was smelting. $7 million loss, right? We can be shut off at a moment's notice or shut the operation down within a second, and we've done that, right? So like, this is the opportunity and the hook into a much broader ecosystem. Specifically for our business, it was kind of a latent realization was, well, like, this is Amazon selling books online. Right? They still sell books online, but you wouldn't call them an online bookstore, right? We have an opportunity to look at and value generation assets in a way that would allow us to have an asymmetric opportunity to get closer and closer to and eventually operate generation. Because if you're running a dam that works great, but it's in a wholesale market that's fetching low rates, it's actually more valuable for us because we could supplement our load with cheaper power.
Can I interrupt just a sec? Because Steve and Trey, you just hit on something. Yassine, they are bringing to life sort of the report we wrote with Block, right?
I mean, the spirit of what you're ultimately saying is, and John, you tackled this at the first level. It's Bitcoin's energy consumption is essential to unlock the security guarantees that Bitcoin provides as censorship resistant money. And then the second is, okay, well, let's actually look at the energy mix and look at the energy output of Bitcoin. And you go back to the free market principles that are governing Bitcoin, and they create really powerful incentives for these miners to seek out extremely cheap electricity. But what that does, that inadvertently steers them towards like a hydro dam in upstate New York that is unable to provide energy to Manhattan, but would very well like to sell their power elsewhere. And so what that ultimately does is, in many ways, Bitcoin mining is helping fund and support the expansion of these renewable energy solutions because they provide these ancillary services. And that goes back to what, both Steve and Trey are saying, is that you're actually abstracting the use case for Bitcoin away completely. It's like you're just presenting the numbers, you're presenting the marginal purchase of power, and yet you're slowly but surely you're ensuring that the infrastructure is seeped into Bitcoin in a way that becomes almost irreversible. So in many ways, the decentralization of Bitcoin mining, you can tackle at so many layers. I think one like this is a really good example of it, where it's like, you don't necessarily need to be net long Bitcoin anymore to be mining Bitcoin.
Can I ask a question? Because I always wondered. We did the report with them. Was it 2019 or 20? And it was
2020.
It was in response. I remember Elon Musk, once he put Bitcoin on Tesla's balance sheet, people came at him from the environmental angle. And then he kind of pulled away. And then we wrote this report with Block and with this hypothesis, because it really hadn't happened yet, right, Yassine? So I would love to know, how are energy companies are you going around the world with this? Is this huge demand, or is this slowly evolving? And same with utilities.
For us, it's a great question. So for us, I think it's really a function of spending the time, right? We just went through a 2+ year SEC review de-SPAC process. So we're chomping at the bit and teed up for tremendous growth. And that's not just because we know how to mine Bitcoin and we've operated these facilities and built these facilities. It's because, the key bottleneck to scale is, one, you've got capital, and two, you've got to have the relationships with the generation companies. And this is about building trust. Everyone's at a different place on the curve. I mean, we spent 2.5 years with the folks at Eagle Creek before they said, hey, go ahead, and just educating them on the opportunity. And so I think it's really, as it relates to, this Bitcoin mining's misunderstood. When you put that paper out in 2020, I bought that, okay, it is misunderstood. The people making the decisions, they just kind of don't fully understand it, haven't spent the time. We need to make it easier, more digestible to understand what Bitcoin mining really does, because they're saying it does the opposite. Now, I don't buy that they don't understand it. I think it just doesn't align with their incentives. Bitcoin mining doesn't align with the incentives for the world that they live in. And they're pushing narratives to try to drive, whatever their, interests are, right? And I think for certain parties, those can be slightly different. But there are just people that don't want to see Bitcoin succeed.
Are you saying this about the utility customers that you're actually helping?
Yeah, Trey's saying the broader narrative, like the ESG narrative.
Oh, okay.
Example, right?
Okay, they don't. I got it.
Like there's not an incentive to, let's say promote Bitcoin as a net positive for energy.
I'm confused about that a bit in the sense, in terms of the people you deal with, Trey, in terms of the Eagle Creek example. This is a win-win for them.
Oh,
right?
This is a win-win for Eagle Creek. I was saying the broader audience of, whether it's the government and their incentive to,
Yeah, this is the free market at work, though. So the others are going to look at Eagle Creek and say, "Hey, why aren't we doing that?" And has that started? And same on the energy side.
Well, let me tell you a quick story, real quick, and then I'll tee up Steve and Benjamin. So this past January, we hosted the second Nashville Energy and Mining Summit, and the first one, the feedback was, it'd be great if we had somebody from the TVA come, Rod, even if it's a project manager, just so that they can hear us and so on. And of course, I aim big, and we want to go for the top person, like how Elon, comes to the park during July. And we got the president and CEO of TVA, Jeff Lyash, to come. And if you look at the scoreboard and I found this out, and since it's public knowledge, I'll share. But if you ranked in terms of importance by their compensation, Jeff Lyish is number one. Rightfully so, I would make the argument, since he manages over 40% of the energy grid in the United States of America, which is pretty important with the Tennessee Valley Authority. He's also the chairman of the Nuclear Energy Institute. So I say all that is because this gentleman could be anywhere in the world during a winter storm in Nashville, Tennessee, and he decided to spend 2, maybe 3+ hours with 150 plus people, Luke, Steve, like all these folks were in town, John, and from, I don't know, 10 plus countries, all different range of people across the mining industry. And he got to meet a bunch of folks and spend some time. And I'll say 2 quick stories. One, Steve, there was a black box demoed outside during the cold, and I show it to Mr. Lyash, and immediately he gets it. Immediately. He goes, "Why are you wasting that heat?
It's the black pill. We call that the black pill, not the orange pill."
He quickly calls me out, rightfully, and says that's wasted heat. How do we, optimize that and repurpose that heat? And then quickly, while he was also, Mr. Lyash was also on TV asking us all to turn off our power, we had another gentleman, Schnitzel, who powered a hot tub right in the front of the park with Bitcoin miners. So we were repurposing our existing heat to do that. And I say all this is because, to Trey's point and a lot of the other folks, gradually then suddenly, I think in their economic interests, they're going to want to participate in this game voluntarily. And it's such a beautiful game. And when I was speaking with Mr. Lyash and his team, they were going to talk to Google about a data center, and then the hospitals about, more power and so on. And they're like, "Rod, you guys always come to us and voluntarily say, we will turn off when you need us to turn off for the betterment of the community, if obviously the economic incentives are there." Google's not turning off their power when there's a winter storm. Rightfully, the hospital should not. They should have generators and do all that jazz. But Trey and Benjamin and the number of folks are working in these communities. And that's where I think the power is. I was at the local level, getting to know your local community and really incepting yourself and integrating yourself into that local fabric.
Bitcoin mining is really the only activity that I'd say consumes so much energy, but in which you can pitch it as, we will be the ultimate grid stabilizer for you guys. Just allow us to build on top of whatever it is that you're building. And I think that's like a really unique. It's the incentives of, it doesn't matter. You can turn off your mining operation and Bitcoin will continue to operate, and you can turn it back on a moment's notice and start generating revenue. And so I think has that maybe like the pitch to, let's say, I'm asking Steve and Trey, when you're presenting this, let's say, it's like, is the pitch really around that before it is around Bitcoin?
For me, it's not even around Bitcoin, right? Like our first site in Tennessee, we started conversations with TVA as Bitcoin was at 20K, and 2 months later, they're like, we've got a bunch of people at the table. This is in 2018, and Bitcoin sells off 60%, and they're like, "You're the only one left at the table. Everyone else was asking for hundreds of megawatts." It's our first site. We were just asking for 5, right? So we broke ground at a facility in Maynardville, Tennessee, which is, they rate these counties, Union County, from most distressed to most prosperous. This was in the most distressed category. It was stranded power, so to speak, but stranded because there wasn't the infrastructure, the transport, the highways that would be required to have a 5 megawatt manufacturing facility, because you got to hire a bunch of people and you got to have a bunch of freight and logistics. This is an ability for us to go in, engage the community. I got to know, the Union County mayor and the city mayor, got a bunch of kids from the high school out, and make a real difference in a place where that stranded power was there, not because it was being flared off in Steve's example, but because there was no other business that could consume that in the traditional sector. We can operate 5 megawatts with 2 FTEs and no problem, engage the community, make a real difference, and drive that forward. And not only is it not a kind of long lead time, you got to build a manufacturing facility, staff it. We also come in and we pay 2 times the average wage in the county for the folks that work on site. So it makes a real meaningful difference because we don't have the traditional customer as a self miner, right? We have employees, shareholders, and the communities we operate in, and we view those kind of as our customers and the power partners. So, I thought that was worth sharing. It's a little different than the Eagle Creek kind of behind the meter hydro, and capturing that kind of stranded power. But this is something that I think is really unique for Bitcoin, the nature of Bitcoin mining operations. It presents a real opportunity to drive significant change places that are more rural or secluded that can't foster the traditional kind of manufacturing sector that would consume that type of power.
And to add my 2 cents to the power question, I asked, who is the government or anybody else to tell the free market what we should use our power in? That question power has always been a free market. The government has never really intervened with any type of corporation or any type of other power draw in the history of the United States, as far as I'm aware. And, like Rod pointed out, the power companies or the government doesn't go to Google and say, okay, you need to curtail your power. Bitcoin is kind of like unique, as that's the only industry where that is kind of demanded on. And I believe, that shouldn't be a question at all. I could get on the flack here, but no one goes after, let's say, the PC gaming market and saying that's a not useful area to burn power. No one questions that, even though you could say Bitcoin mining, it produces more to the economy than gaming. So that's kind of my stance on it. There shouldn't, especially on the question, where the government recently, created all the big miners of how much power is used. And I'm glad, Trey and Benjamin and everybody else got together and were like, no, we're not going to answer that. Like, why should we answer that? No one else has ever needed to answer that question.
I don't think the curtailment is so much something that's being required of miners, but a benefit that's being offered to get better deals and to make mining more possible where it would not otherwise have been.
The power question in general, like, why should we need to answer, questions from the government of where this power is being used?
Part of why people feel the need to answer that question hinges on just Bitcoin's explicit and direct energy consumption. It's an extremely transparent network. What you see is what you get, and the hidden, let's say, costs of, let's say, the traditional financial system or PC gaming or washer and dryers. There's so much, they're not as explicit. So it's much easier to point a finger on something as explicit as Bitcoin, when in reality, it's like Bitcoin is in many ways contributing to economic prosperity.
Can I just say one thing in the context of history? This is exactly the discussion that took place at the beginning of the internet. The internet was consuming as much electricity as this, that, or the other country. And there was an uproar until it started benefiting more and more people. I think that's what you're talking about here, right?
Really, I mean, Steve, you said something really interesting. When you're providing your generator device and you're providing that Bitcoin mining embedded within that device, and people are seeing the benefit of that. And this whole conversation has been about why consumption of energy is good and what it does for grid stabilization and all that good stuff. But the question remains: why are we in the position that we are? Why are we maligned? Why is the government coming after us? And really what it comes down to is simply the education about that convergence of power and sound money. I think a lot of us understand the sound money principles. That's why we're all into Bitcoin. But the convergence of the two is where we need to do so much work in terms of educating just everyone on the ground, state, federally, right? It's one of the reasons why Ryan hired the former assistant to the president of the United States as our head of public policy, because we needed to, have a voice where there was none, right? And that's really what it comes down to. It's the education, and it's the education whether you're doing having a commercial conversation like Trey and his, in the TVA, or Steve, we're dealing with your utilities. The same for us. They just don't understand that yet. And when they do understand, there won't be a problem because they'll understand it's a win-win.
I want to add some flavor to that because while I agree with you that there's been a severe lack of educational content and GRIID has stepped up hugely in that manner, especially with recent events like helping with the EIA stuff and all the things you guys have been doing for the last couple of years. And you're seeing it at a bigger company, other bigger companies too, like Marathon is doing a lot more educational content. This was something a lot of us a few years ago were talking about. We need to be a little more transparent on how we're benefiting the market generally. But I am a little pessimistic, as people know me, on this topic, because I basically have a perspective from the oil and gas industry. That's where I'm from, if you will. And I think there's plenty of education on why oil and gas has been an incredible net benefit across the board on any part of our economy. And yet, despite you could cite like thousands of papers, thousands of articles, whatever you will, there's been plenty of education. We still get attacked relentlessly by environmental interests that do not understand, whether they don't understand it or they do and they don't care. And it's constant. And that's why I'm a little pessimistic, because on even if we educate, the EIA and the other 3-letter acronym organizations that rule us, I don't really expect, I sort of have a conservative outlook where I try to develop my business in a way that I try to mitigate the risk of more or less like regulatory attacks or regulatory moat building, if you will. So I do agree wholeheartedly with you, Benjamin. I am a little pessimistic, though, that it'll yield all the effects that we hope it will. But I do think it will yield a lot of positive effects. And generally, the more the public especially is aware of how beneficial this is, the better for all of us as industry players. And the last thing I'd just say is that, when you talk about, like, I always try to simplify, whether it's on-grid riot scale mining or it's off-grid, like upstream data customer style mining, it's all the same. It's power generation, power distribution, and load. And the common theme that's a problem in any energy system is when you're forecasting demand, if it's an oil facility, which is relatively easy to forecast, or if it's like, I couldn't imagine how hard it is for the Texan utility planners to forecast the demand on their economy, especially, 2020, COVID comes and all of a sudden millions of Californians are flocking in, jacking up the load on the grid. I mean, it's impossible to really accurately forecast demand. And so what any systems engineer has to do is you oversize generation. You think demand's going this way, but you build in a massive safety factor. And of course, what does that mean? It means that there's way more CapEx going into the infrastructure to deal with that uncertainty, in which case that cost is passed through to the ratepayers. What I would expect to see is in jurisdictions like the TVA, where Trey is well ingrained, in Tennessee Valley area, in Texas, where you're seeing all of this like innovation on bringing Bitcoin mining loads to work with the basically system engineers and utility power planning, you should see ratepayers pay less and less over time. Because as someone financing these projects, if I'm financing a power plant, let's say it's a wind farm, I'm going to ask them, what's your plan on selling all this extra power you're going to generate when there's no actual market demand? Where's your Bitcoin mining contracts? Because why is you're effectively taking overall higher cost of capital and worse project economics if you don't have that plan in place. And you're going to see that play out, like you guys alluded to earlier, through pure market competition. You're going to see the leaders show how it's done, and everyone else is going to be playing catch up.
Steve, I have a quick question. I remember seeing Exxon not too long after we wrote that paper and started talking about this. Exxon, and maybe I'm just out of the loop here, but they actually took Bitcoin mining machines into their natural gas fields for exactly the reason you're talking about, to channel the flares and venting, the methane, which, I mean, we've done studies on how much more damaging that is to the economy than CO2. So haven't they helped you with education? Have they continued in this process? And is it that they are in the oil and gas industry, so the environmentalists won't even listen to them. But are they helping or actually hurting because they're oil companies?
Well, I think like big projects like that Exxon announcement, I think it was more of a leak at the time, because they at the time they were working with Crusoe Energy, but that's a big deal for say us here, like industry players. Anytime there's a big event that raises credibility, like that Exxon, when that thing leaked and there was some articles about it, I could probably guess it helped our business, even though we weren't supplying the solution to Exxon. It brought in interest from Exxon adjacent competition, even small guys, medium guys, and big guys. We do work with lots of big players, and when they read these articles, that actually is a big factor. In the same way that these ETFs have brought confidence in certain market segments that needed to see that leadership. So I would say like all these events that we see, every individual having a success story, it just keeps building to the momentum of our number go up technology.
What I can tell you is we've had hundreds of meetings on the Hill now with staffers and in both houses. I can tell you that there are staunch supporters, and on the other side, there are people that are staunchly against. And there's a big, wide, medium, squishy part where they don't really have an opinion, right? And that's really where the Exxon sort of news helps, right? To add more support, because they're trying to formulate an opinion. And remember, they have to operate within the confines of their party and that sort of thing. And that's really where those types of data points help. And that's really where that education is really going to help, so that we can help create policies that aren't, they don't necessarily have to be incredibly favorable. They just have to be not completely destructive, which is kind of what we're seeing, right, under the current administration and, in terms of what we saw with the DOE and the EIA.
This makes me think about like kind of the future ahead. And by the way, I got to give Brian Morgenstern on your team a massive shout out. I love that guy. He was instrumental in fighting back. Somebody needed to fight back, and him, along with the Tennessee Blockchain Council, should be big ups to them. Where do you guys see, and then we can wrap here, and this has been fantastic, and thanks again for joining us. Like, where are we going? I mean, we touched on regulation, we touched on decentralization, we touched on home mining, we touched on on-grid scale, off-grid. I'm curious to know, just around the room, it's 2024, end of February. We had a nice little price bump, enthusiasm's high, everyone's got smiles on their face. We fast forward a year from now, we're back on this Riverside link. Yassine's got awesome glasses still. What's happening in the world of Bitcoin mining?
I liken it to the episode of The Simpsons where Homer climbs the mountain and he thinks he's at the top, but he's not at the top, right? It just never ends, right? And so what they do is they just simply cut off the top of the mountain, but that's not going to be the case for us, right? It'll just never end.
Yeah, I foresee continued regulatory challenges. It's just sort of a natural progression of new technology. Like sometimes the regulators, they might have best intentions, but they don't implement the best rules, and that can be simply because of lack of understanding, which is why the education part is going to be important. So I would foresee continued and increased regulatory pressure across the board, both off-grid, oil field. I could give a few anecdotes of little things we've seen, but on-grid as well. But also, I think what I'm most personally excited about is just to continue to see the tech advance, whether it's at the machine level, the server level, or like I love seeing how others design and build their portable or stationary load centers, like their big mines, and how you see them constantly evolve and improve their facilities. So, and there's plenty of really cool technologies, and I mean, obviously John at FutureBit is doing a great job on his integrated home mining node, and you're seeing really cool stuff. I think Rod, you guys, or I don't know, I think you're affiliated with OpenSats, or maybe you are, but Matt Odell, like I saw them do a little sponsorship on the BitAxe project, which I think is awesome. It's sort of adjacent to what John works on for home mining decentralization. And I've always thought the home mining thing, even though it might sort of have a low impact in a way compared to industrial miners. What it has a huge impact on is education, and in getting people, because I didn't start my business until I started home mining, and I created a whole business out of it. And there's 1,000 anecdotes like that Bitcoiners could tell you, and they've developed amazing businesses today. And pace of innovation is in such a nascent industry is really fun to be a part of.
Just going off what Steve said on the educational front, so we just announced a pilot program with Rutgers University where we're getting our devices into the university level, and we're expanding this pilot program across the U.S. And getting our devices in as many schools as possible. And that's kind of what decentralized small device home mining does. It allows devices to be spread to all over different aspects of life and education. It allows everybody to participate at the base level and people to actually learn. Like what I found the most over the past decade of working on Bitcoin is people don't really understand Bitcoin when they buy it off an exchange. But when they see the actual device on their desk mining Bitcoin and then they see those sats come into their account, that's a whole different kind of light bulb that goes off. And people truly understand the decentralized nature of Bitcoin and what it means. Big government, like as we discussed here, big government will always be big government. They'll always regulate. They'll always not have the interests of the people in mind. And Bitcoin was created to combat that. And we need, I think the future of Bitcoin mining is that. It's getting millions involved at the base layer and making Bitcoin be a truly force not to be stopped in the future.
Yeah, I think the next year is going to be epic. We'll all certainly have gotten a lot more texts and calls from family and friends than we did the past year about Bitcoin. We will still be mining. Block subsidy will be 3.125 Bitcoin. We'll be in a world where generally the public is more educated. We'll have more folks that were previously, calling Bitcoin rat poison, holding Bitcoin in their portfolio and doing a 180. I think we'll continue to see a ton of pushback, which presents a problem, but frankly is typically a good indicator as to where Bitcoin and Bitcoin mining is in terms of the being on the forefront of folks' mind. And I think we're going to see the technology and the innovation associated with the ways that the Bitcoin miners are monetizing their strategy. You'll see kind of two divergences. You're going to continue to see consolidation. You're going to see more and more generation companies step up as we get closer to the, nobody got fired for buying IBM, right? Like we're not quite there yet. Nobody got fired for mining Bitcoin at their generation facility, but we're going to get a heck of a lot closer to it. And this next year presents a tremendous opportunity for all of us to do the work to educate the general public, because Benjamin mentioned something really important, which is that massive divide from kind of pick the position on one side of the issue or the other. The others are looking largely to their constituents. And as the public forms their opinion, it's going to inform, the future of the regulatory, ESG, et cetera, pushback that we get as an industry. So I think Bitcoin will continue to take on tasks that seem like impediments and in hindsight look like insurmountable, daunting problems, and it's going to be a great year.
On the mining pool side, we've still got a few more months at Ocean before we'll have decentralized mining going, so I guess in a year hopefully there will be some of the mining pick up, maybe a good chunk of the network making their own blocks again.
If you want the purest experience possible, you buy a FutureBit Apollo, mine to Ocean, deal with the variability that we're all used to, like just with a real mining pool, and also get the excitement of finding a block. It's addictive. So if you buy one of John's products, hook it up to Luke's product, just because you're a newbie, you will be hooked. I guarantee you.
Yassine, you wanted to share any thoughts? as well?
Yeah, I mean, I think my light bulb moment, what I'm excited about the future of Bitcoin mining is the abstraction away from Bitcoin mining, and that there's going to be an increasing just default Bitcoin miner, whether it's at larger, energy plants or inside of the home. It's like I see a world where you have your check the boxes on apartments that you're renting. You go, okay, AC, washer, dryer, Wi-Fi, Bitcoin miner. That's I think what the future of Bitcoin mining might look like. So I'm excited, and I really enjoyed this conversation.
Can I ask a question that you might want to think about? And it doesn't have to be answered. The question in my mind is, will Bitcoin miners become generators? Or will generators become Bitcoin miners? In the end, we're all going to be the same. That's our thesis, but we will see what happens.
I think we're merging, Ben. I don't know which is which, but the merger.
Well, we have yet to see. We're not going to know the answer to that right away. But anyways, just a question
Convergence.
to leave you all.
There's the definition of convergence right there. That is like you don't even you can't even distinguish one over the other.
Yeah, another example of convergence between the physical and digital world, which is happening all over the place. So, Rod, you asked me what I pulled out. Education is a theme that comes out of every single one of these episodes. And that's partly what you're doing here is educating and inspiring people to go and learn a little bit more about the reality of this situation. So the idea of stranded assets in rural areas, I mean, if you want to get more people excited about it, put them on a mission like that. I'd love, Yassine, maybe we start mapping out where stranded assets are around the United States as we think about the centralization, decentralization axis that is evolving out there. I think that would be fun. And then the other thing is we are going to be we may be working with a country. And John, maybe there's nothing like, and Luke, nothing like bringing to life, what this is than in the way you're doing it. So maybe we'll involve you.
That would be awesome.
Yeah, I'm sure lots of offline follow-up conversations from this brainstorm, which is exactly what we love to see.
So let me leave everybody with this as well. And just with, of course, I love stories, which is this Nashville Bitcoin meetup started with like 20 people. And then we grew up to 100, a couple hundred people, and it was pretty massive. Then Bitcoin Park emerged from that. And then we had all of these policymakers kind of attend these meetups and then just sit in. And then they introduce themselves. And then next thing you know, we got from Senator Blackburn, her and her team, Senator Haggerty, him and his team, Governor Lee's team, and then the list goes on. Like even Monday, I believe I'm going to Maury County, Maury, and meeting with the mayor of Columbia, Tennessee. They all want to learn about Bitcoin, and especially as there's enthusiasm around a spot ETF and all this other stuff. And I say all this stuff is because if you're in your locale and you don't have a Bitcoin meetup, start one. If you do have a Bitcoin meetup, attend it and then continue to attend it. Magic just happens when you build local community, and you can make that change at the local level, and it could be big.
Rod, Yassine, Kathy, thank you so much for having us on.
Yeah,
this was fun. Thank you.
Thanks, everybody.
ARK believes that the information presented is accurate and was obtained from sources that ARK believes to be reliable. However, ARK does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARK. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARK's current views and assumptions, and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.